Order flow, a beginner's guide to market dynamics. Order flow is the real-time visualization of market orders as they execute. It shows you exactly where buyers and sellers are active in the market. First, order flow provides real-time market data. You see actual buying and selling happening right now, not just price movements. Second, it reveals volume at each price level. You can see exactly how many contracts are traded at specific prices. And third, order flow identifies market imbalances. It helps you recognize when buyers or sellers are dominating the market. Remember, order flow is the footprint of market participants. Let's understand the battle between buyers and sellers. On one side, we have buyers, represented by green or upward movements. They show aggressive buying pressure, pushing prices higher. On the other side, sellers, shown in red or downward movements. They represent aggressive selling pressure, pushing prices lower. The market delta tells you who's winning. A positive delta means buyers are in control. A negative delta means sellers are dominating. The key insight? Order flow helps you see who is winning the battle at each price level. Now let's read the order flow chart. Each row represents a price level. On the left, you see the price. In the middle, the order flow bar shows buy volume on the right side in green and sell volume on the left side in red. The numbers tell the story. Larger buy volumes indicate strong buying interest at that price. Larger sell volumes show selling pressure. The delta column shows the difference. A positive delta means more buying than selling. A negative delta means more selling than buying. When you see a strong positive delta, like plus 177, that's a signal of heavy buying activity. Key points to remember. Larger volumes show key levels. Positive delta equals buying pressure. And watch for imbalances at support and resistance zones. Each price level tells a story of supply and demand.
Understanding delta is crucial. The formula is simple. Buyers minus sellers equals delta. Let's see it in action. If buyers trade 850 contracts and sellers trade 620 contracts, the delta is plus 230. This means buyers are more aggressive. Delta comes in three forms. A positive delta, like plus 230, shows strong buying. A neutral delta, around plus 15, indicates market equilibrium. And a negative delta, like minus 185, reveals strong selling. Positive delta means more aggressive buying. Near zero delta shows market equilibrium, and negative delta indicates more aggressive selling. Volume profile analysis reveals where the most trading activity occurred. High volume nodes, or HVN, are price levels with lots of trading activity. These often act as support or resistance because many traders have interest at these prices. The point of control, or POC, is the price level with the highest volume. This is often the fairest price where most traders agreed. Low volume nodes, or LVN, are areas with little trading. Price often moves quickly through these zones because there's less interest. The value area contains 70% of the trading volume, typically between key price levels. Pro tip: look for trades at low volume node areas. Price often accelerates through these zones.
Let's start to look at a real trading scenario. As the chart develops, we can see the market is in a clear downtrend. Notice the series of red bars. Sellers are firmly in control here. We can confirm this by looking at the large negative delta at the bottom of these bars. See the minus 282? That's aggressive selling pushing the price down. But watch what happens right here at the low. This is the crucial moment. Despite all that heavy selling pressure, the price is failing to push significantly lower. The sellers are running out of steam, and it looks like buyers are starting to absorb their orders. And there it is. Watch this next candle. The momentum completely flips. We get our first candle with a strong positive delta of plus 104. That is our confirmation signal. The sellers are exhausted, and buyers have now stepped in with force, taking control of the market. From this point, you can see the market starts to rally, giving us a clear, high-probability entry to go long. This is how you use the footprint to see the story behind the price. Here are the key takeaways. Order flow equals real market activity. It shows actual buying and selling happening right now. Delta reveals market balance.
Positive delta means buyers are winning. Negative delta means sellers are winning. Volume profile shows key levels. The point of control and high volume nodes act as support and resistance. Combine order flow with price action. Order flow confirms traditional technical analysis. And practice makes perfect. Start with sim trading to build pattern recognition. Ready to see what the market is really doing? Thanks for watching. Ready to apply these concepts? Get our free order flow pack for NinjaTrader 8 exclusively from Hammerall.com. Click the link in the description to download it now and start analyzing the market like a pro. Remember, this is educational content, not financial advice.